Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind corporate filings, and boy, do we have a reincorporation revelation for you today. Today we're diving into an F-4 filing from KHEOBA Ltd, a company that is going through a significant corporate restructure. Think of it as changing a company's legal address from one state to another, but with a whole lot more paperwork and implications for investors. This filing is essentially a roadmap for that transition, and we're here to decode what it all means. Before we jump in, if you are new here and love getting the real story behind corporate moves, hit that subscribe button. And for those looking to connect with fellow corporate finance enthusiasts, join our Discord community. The link is in the description below. The main event here is that KHEOBA is reincorporating. They're moving their corporate home from Nevada to the British Virgin Islands, or BVI as it is often called. This might sound like a small detail, but it can have big effects on how the company operates, how it is taxed, and even how shareholders' rights are protected. The company says this move is to give them more flexibility, save money, and hopefully make it easier to access capital markets because the BVI is a jurisdiction more familiar to their investors. Now, why is this happening? Well, it seems like the majority stockholder, who owns a big chunk, around 74% of the company's shares, has approved this change. The deal is that KHEOBA Corp in Nevada will merge with a subsidiary called KHEOBA Ltd, and then the whole operation will become a subsidiary of KHEOBA Ltd in the BVI in simple terms. The Nevada company will cease to exist, and its shareholders will get shares in the new BVI company, supposedly on a one-for-one basis. The board believes this move will give them more flexibility and save costs. Plus, the main shareholder lives in Malaysia, and the company's operations are in Europe and Asia, so a BVI incorporation might align better with their global footprint. They're also hoping to keep trading on the OTCQB under the same ticker symbol. KHEOBA, right after the switch, though they admit there is no guarantee that will happen. Now, no corporate move like this comes without risks, and KHEOBA is upfront about that by dedicating a big section to it. They're a development stage company with a history of losses, and they're constantly worried about whether they can actually make their CRM and ERP software products catch on in the market. They talk a lot about the rapid changes in technology and how they might not be able to keep up. Another big risk is that they might need more money in the future, and if they can't get it on good terms, it could really hurt their plans. They also point out that their services and software aren't patent protected, meaning competitors could copy their ideas, and they're relying on freelancers, which could pose a reputation risk if clients aren't happy. Plus, they do not currently have any general liability insurance, which is a pretty significant exposure to keep in mind. One of the most significant risks to future shareholders is that their main shareholder, Tien Seng Tong, will continue to own a majority of the shares. This concentrated ownership means he can pretty much control all major company decisions, which might not always align with what other shareholders want. It also could make it harder for anyone to try and buy the company, or for shareholders to get a premium for their shares in a takeover scenario. Moving to the BVI also means that shareholders might have fewer protections than they would in the US BVI law is different, and getting legal recourse there could be more difficult and expensive. Plus, as a foreign private issuer, KHEOBA BVI will have fewer reporting requirements to the US Securities and Exchange Commission, or SEC. This means less public information might be available about the company. Let's look at the actual deal structure. This is the merger agreement itself. It lays out how the Nevada company, KHEOBA Corp, will merge with KHEOBA Ltd, becoming a subsidiary of KHEOBA Ltd. The key takeaway here is that each share of KHEOBA common stock will be exchanged for one share of KHEOBA BVI Class A ordinary shares. It also mentions that any stock options will be converted into options for the BVI shares on a similar one-to-one basis. Now for the numbers, this filing includes financial statements for interim periods, which is great because we get more recent data. As of the 31st of July 2025, KHEOBA had total assets of $844,448. This is made up of current assets like cash and accounts receivable, plus some right-of-use assets and development costs. On the flip side, total liabilities were $436,979, leaving them with stockholders' equity of $407,469. What is interesting is that their current assets are significantly higher than their liabilities, which is a positive sign for short-term stability. Looking at their performance for the 9 months ended the 31st of July 2025, KHEOBA reported revenues of $680,057. This is a massive jump from the $32,115 they made in the same period the previous year. Their gross profit also increased significantly. The biggest news here is their net income, which came in at a healthy $366,644 for the 9 months ending the 31st of July 2025, a stark contrast to the net loss of $26,513 in the prior year. This shows a dramatic turnaround in their profitability. Let's check out how that profitability reflects in their equity. Their retained earnings jumped from a deficit to a positive $322,937 by July 2025. This is a really strong indicator of improved financial health and a move away from the previous losses. Cash flow from operations is also looking much better. For the 9 months ended the 31st of July 2025, they had positive cash flow of $202,436 compared to a negative flow in the prior year. This tells us the business itself is generating cash, which is fundamental for sustainability. Digging into their revenue streams for the 9 months ending the 31st of July 2025, consultancy services brought in $180,000. Commission for software sales was $394,929, and software sales added another $105,128. This shows they're diversifying their income beyond just tourism programs. However, a bit of a red flag appears when we look at revenue concentration. For the 9 months ending the 31st of July 2025, Customer A accounted for 32% of their revenues, Customer B for 26%, and Customer C for 12%. Relying so heavily on just a few customers can be risky. If even one of these major clients decides to leave, it could significantly impact KHEOBA's financials. Now, let's talk about KHEOBA's business itself. They started in 2021 as a software solutions expert, initially focusing on the tourism industry in Europe. By 2024, partnerships with ERP and TRM developers, plus an expansion plan into Asia, marked their growth. A key development was the acquisition in January 2025, where Mr. Tien Sing Tong bought a controlling 74% stake. This filing also introduces us to their management. Mr. Kam Yu-hon continues as President, Chief Executive Officer, Chief Financial Officer, and Secretary. Mr. Tien Sang Tong remains the sole director. It is worth noting that Mr. Hon is currently working with no remuneration, which is common for companies in this stage, but highlights the need for future revenue growth to support the team. As we mentioned, Tien Sing Tong is the dominant force, holding 74% of the shares. This concentration of ownership is a key factor in understanding the company's governance and future direction. The independent auditor's report flags that there is substantial doubt about the company's ability to continue as a going concern. This is a serious statement. While management plans to raise more funds and grow revenue, the auditors are saying that based on their financials, there is a real risk the company might not be able to stay in business for the next 12 months. This is a critical risk for any investor to consider. So, what is the verdict on KHEOBA? On one hand, they've shown impressive revenue growth and a significant turnaround in profitability in their most recent reported periods, especially compared to previous years. They're expanding their software offerings and establishing a presence in Asia, which are positive strategic moves. The acquisition by Mr. Tien Seng Tong brought in a major investor, which is often a good sign for future capital. However, the fact that the company's auditor has raised substantial doubt about their ability to continue as a going concern is a major red flag. This, combined with a high concentration of revenue from a few major customers, points to significant risks. The move to the BVI also introduces complexities regarding shareholder rights and regulatory transparency. In essence, KHEOBA is in a critical growth phase, showing promising signs of recovery and expansion, but with considerable financial and operational risks still at play. It is a classic high-risk, potentially high-reward situation. What are your thoughts on KHEOBA's reincorporation and its financial turnaround? Let us know in the comments below if you found this deep dive valuable. Please give this video a thumbs up and subscribe for more corporate analyses. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.